by digital currency, by digital Chinese currency. Why? Because frankly, our central bank has been slow, and there's an appointment coming in January of 22. The president's got to decide whether to change over who's leading the Federal Reserve. The Federal Reserve runs our payment system. And I think we need to move that Federal Reserve into the modern era.
What about the flip side is we actually hold the economic nuclear button in the United States. China still uses dollars to interact with the rest of the world for the overwhelming majority of their transactions. And so if China's belligerence gets to a point where we need to do something, potentially engage either militarily or economically, I believe we should press that economic button and remove them from the SWIFT system and use that as a deterrent for China's potential invasion of Taiwan. Those are the things that I think need to be socialized in our government.
So do they wait until they build up their parallel SWIFT system?
You say parallel SWIFT system. So far, it's kind of like the old axis of evil, right? You have Russia partnering with China, and you have Iran as a friend of China, and you have North Korea as a potential friend of China. If the bad guys want to go hang out on the bad block, there is not going to be enough of a, quote, SWIFT system for the bad guys to properly operate. So I don't believe that that's an alternative. I think that their reliance on the globe is still going to be tantamount to their success, and their global primacy is something that they've convinced the academics, some academics in the U.S., some other think tanks, and even some of the Wall Street analysts.
Welcome to the Crypto Teacher, and I come back with that video just to make you think, and how soon things have changed. Every financial channel you turn to, it is now bearish. Everybody understands what the Fed is about to do. But we have Cal Bass, which is clearly part of the think tanks, playing the Hegelian dialectic. China is not going to have another option to the SWIFT system when we already know they have it. We know the rise of the digital yuan is coming. We have Egypt and Israel already investing in the yuan, guys. That should tell you everything. Not only just the BRICS nations. And Cal Bass talks about the energy crisis in Europe. And we know that was all created. Remember, the NWO caused the problem. Wait for the reaction and run in with the solution. And then, guys, we have the Fed. Yes, the Fed is going to be shrinking liquidity. And we know normally when we get to this point, they normally pull back and let the stocks move right up. They've been doing it for the past 10 to 15 years. We've had the longest expansion in history. But guys, we know this was all for a reason. It was for the fourth industrial revolution that nobody could see, where the robots, algorithms, and drones take over the economy and the sheep go inside the metaverse. So that means they're going to allow this legacy market to fall. And that means America to Babylon is going to fall. That means that the American US dollar is going to fall. We can already see this starting in the housing market. And once they start rolling these mortgages off this balance sheet, you're talking about trillions and trillions of dollars worth. These rates are going to keep creeping up, which are going to hit stocks and cryptos. It's going to bring everything to its knees. And what's going to happen? The selected NWO stocks and cryptos are going to rise like the phoenix. Or should I say the dragon? Because we know it's going to be China, the dragon, that's going to have the new reserve currency. The digital yuan backed by that digital SDR. And remember, the Crypto Teacher told you because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Is these policies that are ESG driven and morally driven, that we should convert everything to alternative energy tomorrow, are going to end up starving the poor children of the world. Like it's and killing many of them. So it's counterintuitive that could actually happen, and that's what we're seeing, Melissa, with the prices at $1,000 a megawatt hour, 1,000 euros a megawatt hour. You're going to see real problems in Europe. I can't believe it's not on the front page of every paper every day.
We've, of course, had a couple of negative GDP readings. We've seen jobless claims inching up. Initial jobless claims had sort of a bit of low in July and have been inching up since then for the past couple of months. So I think there's a whole bunch of economic indicators that are looking very, very bad. And I think we're sort of in store for a crash landing, or a very hard landing at least. And I think in contrast to prior cycles like this, the Fed is not going to be in a position to sort of lower interest rates and boost the markets. And that's what they've traditionally done. When the economy slows down, the Fed cuts interest rates, they boost liquidity into the market, and the market responds very favorably. And equities prices and stock prices benefit from that. This time round, if you take Jay Powell at his word, what he described on Friday, they're not going to do that. It sounds like he's factored in, he's going to hurt the stock market, he's willing to accept some unemployment going up, he's willing to accept a recession to get inflation under control, and that's going to be really bad. And it's a sort of a confluence of events that we haven't seen for decades in the markets. Every time for the past 50 years, basically, when markets have gone down or the recession looks like it's coming around the corner, the Fed has lowered interest rates. This time around, it looks like they're not going to be able to do that, and I fear the worst here. Well, I think the Fed is really the only game in town here. So it's all about what is the Fed going to do and not do. And I think when we saw those lows back in June, remember what the Fed had said basically in earlier in May. They said we're going to start to wind down our balance sheet. We're going to sell off our bonds. We're going to sell off our treasuries and our mortgage-backed securities. And that, of course, was going to put a tremendous amount of pressure on bond prices and drive interest rates way up. What the markets then saw is the Fed was not terribly serious, really, about reducing its balance sheet, or only reduced it by a very, very small amount. And on the mortgage-backed securities side, hasn't reduced it at all, really. It's basically been the same level for the past 6 months. So what Jay Powell's speech on Friday basically outlined was, yes, we are going to do this. We are going to reduce those levels. So once the Fed starts to sell its mortgage-backed securities, bear in mind, they're sitting on close to $3 trillion of mortgages. Once they start to sell that, they're going to push mortgage rates higher, and that's going to put even more pressure on the housing market. And we've seen tremendous slowdown already in housing, and that's going to get worse. And interest rates there on the mortgage rates are going to go higher. So I think that's really where we're going to start to see some real pain is in the housing sector, and that will then have a ripple-on effect into other sectors in the economy as well.
Yeah, those mortgage-backed securities are really...
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. From COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.